Here are the past picks of David Burrows. Speaking of that treacherous Monday several weeks ago in August, the Home Depot fell, I think, 20% in a half hour and then recovered. But here we are up 25% since you recommended it last year. Exactly what you're looking for, I guess, right?
It really is. This is the biggest position at the firm. We have, I don't know, $75 or $80 million worth of shares, and it's been a long-term position. It's in the right sector. It's the leader in the sector. And it's performed really well. One thing just to touch on, and let's talk about that Monday, the 1,000-point drop. You know, we're a big proponent of using stop losses, and we fortunately manage the trades from our trade desk. And there's one thing that will cause us not to use a stop loss, and that is what I would call a break in liquidity. In other words, where the bids just plain disappear. To push something over the edge of a cliff in the event of a dislocation like that makes no sense at all. And I can count them maybe on two hands over the course of the last 15 years, and the flash crash in 2012 would be one, and this one recently. So we did get a lot of questions on that day. Did we get stopped out of everything? And the answer is no. We would step back in a situation like that.
Because you do it manually. You don't. It's not just locked in.
We manage them off our trading desk, and we aren't just putting a market order in if it trades at a price to stop them out.
Next up here, FedEx. You recommended last October, down 9%.
Yeah, FedEx was in the transports group, behaving very well. When the energy route got difficult in the winter last year, first of all, the rails rolled over, and then some of the logistics companies went along for the ride. And so it's been weak ever since. We got stopped out at about $163.
163, and that was when?
In the middle of winter last year.
In the winter, okay, so a long time ago. American Tower is one you've mentioned before, and this was a past pick. You're out of this one as well. What's the story here?
Yeah, so American Tower, of course, is a REIT, but they own cell towers, and it's a great business model. Just simply, the REITs have been out of favor over the last number of months. Actually, a little better over the last few weeks relative to the market. But there's just been other places to focus, and we're all about focusing in market leadership, and we really got focused in tech, financials, and consumer. And that's, we think, where the leadership is likely to come from as we come out of this correction.
So American Tower, FedEx, David is out of those positions, but still in the Home Depot. Just an extra minute here to ask you more broadly about, you're talking about certain indicators that refute those who say, oh, this market's in a bear market and we're going lower. You're looking at earnings, economic indicators, share buybacks.
Right, so there's just no indication of recession, right? And recession is, over 90% of bear markets come from recession. The auto data is pretty good, jobless numbers are pretty good. The credit spreads for financial services companies are not pointing to any big systemic problem. Seasonally, if you look back to 1988, seasonally from October the 12th through the end of the year, you get 75% of the returns in the MSCI World Index. This is coming up in a couple of weeks, but this is from a point where our indicators show that things are extremely washed out technically. So any small improvement in that, when you look at bearish sentiment, there's tons of bearish sentiment. If you look at emerging markets bearish sentiment, investors are more bearish today than they were at the worst point of the 1998 Asian currency crisis. So there's a lot of things that have all lined up, and we've always talked about, you don't get a near-term low in the commodities until you get a blow-up. And of course, here we are looking at what's going on with Glencore.
Yeah.
A whole bunch of things are lining up. So we just don't see the conditions in place for something longer term.
All right, David, another break here, and then we'll get back to questions after this.